Hey everyone, welcome to the Crypto Roundtable with the Musketeers. Really excited to pull apart this session as to what we're seeing. We've seen a ton of price movement in the market recently, which we've been outlining in our newsletters and to our clients in our channels and our free groups as well. So if you're not part of that, make sure you join up to those as well, where we've been given weekly insights too. In this session, we'll pull back, we'll have a look at what's actually happening with the charts right now. Tristan's going to give an overview to a project that or an update that he's released for the newsletter today, which is really exciting. So you can watch that and check it out because I think there's a lot of valuable information, as always, in his deep dives. And we'll also look at a platform that we're considering moving the newsletter to, which is really exciting. But first, why don't we start with the most controversial story of 2023 so far? We've been having jokes behind the scenes that Sam Bankman-Fried, or whatever his name is, that fuzzy hair guy that went from the love child to the hate child very, very quickly. He's managed to pull 7.3 billion out of his magical hat or off his ledger that he's been stashing up his bum in prison somewhere. I don't know. But yeah, really interesting to see what happens here. I don't know. This is very, very fresh off the press. So it's going to be interesting to see where it goes and what actually is the outcome of it. But there's a consideration that they might be reopening their doors in the second quarter of 2024. I'd be blown away if this happened. And I don't know what it would mean as well for people that were holding FTX on the platform and lost access to their funds. Will they regain access? I know Tristan didn't think so, maybe in the US, but maybe not global. Who knows? So if you were unfortunately caught up in the FTX shenanigans, which hopefully no one on here was, because we were very informative around it, especially Sammy was 10 steps ahead of the curve on that and was very vocal around it. But yeah, if you are for whatever reason or were caught up in it, then yeah, keep an eye on this because it's very interesting to see what happens. I don't know, the guy has to go to prison from what I can see from all the wrongdoing from what I was reading before, so I don't know who would be running it. Sammy said BlackRock should just go and take over FTX, which is a really interesting comment because I don't know if it was yourself, Tristan, or someone else posted the other day the top investors in MicroStrategy, and BlackRock was on there. Who else was on there? I made
Bank
a
of America.
Vanguard?
Fidelity as well. So they're literally like the biggest asset managers in the world have just decided to sort of just suddenly boost MicroStrategy's bags.
Kind of like a proxy ETF.
Yeah, exactly, like a proxy ETF. So I think that sort of does reflect a degree of, or it gives us a bit of a clearer picture, I think, of where it's all sort of heading. So take the Singaporean model, which I find kind of interesting, is that you cannot own crypto unless you're classified as like a professional investor. So I think that's kind of where it's headed. Whereby if you want to invest in crypto through, legitimate means, then you need to do so through like an asset manager like Fidelity or BlackRock, which would explain why they're probably not overly fond on the likes of like Grayscale and ARK that, sort of were just ahead of the curve on them and sort of maybe position themselves a bit better in the market. So now they can get exposure through MicroStrategy.
Yeah, interesting. And I'm sure... Yeah, and I was going to say, I'm sure a lot of people know or are aware of what happens behind the scenes. And I'm sure these big players that have so much control over what happens in countries, governments, everything in between, like your Fidelity and BlackRock, I'm sure they've been doing a lot of stuff behind the scenes to try and bring down the likes of Grayscale and push back their release, which has been a bit of a challenge for them, and that's probably why they're going through the courts. And it seems like that's going to get dismissed, which would be a massive thing for them. So, yeah, I know, Sammy, you wrote about in the top 5 trends, I think it was the 2023 report, you mentioned BlackRock, Fidelity, circling like sharks on all these crypto businesses that just had the kinks in their armor pierced with all what happened on the back of FTX and the low point of the market as well. It caused a lot of pressure on these companies too. So yeah, I think the big players are circling, and that is very evident. They are making moves. I know Fidelity, you can buy crypto through their platform and everything already. So yeah, we'll see where this goes, but all eyes on the big financial institutions that want to move in and mop up the blood that has been spilt, unfortunately, through really the last 12 months, you might say. But there's light at the end of the tunnel with the recent market price movements. Anything you want to add to that before we do have a quick look at the market price movements in recent times?
Yeah, I think a lot of misgivings and bad behavior and a lot of what's happened recently can be forgotten very, very quickly. And like you said, with the price moving higher, it's already hitting news services and whatnot again in a really positive light. That Bitcoin's actually bounced back from all this horridness after being telling everyone that it was dead again. So I think as we approach the Bitcoin halving next year, we're going to start to see that more priced in. We're going to see it talked about a lot more, and there's going to be an understanding that if gold's moving higher through debasement, recession, all that Bitcoin's going to get a pretty good bid. And I think the talk around gold and Bitcoin will be the inflation rate. That Bitcoin's mining reward is halved next year and actually becomes scarcer than gold in terms of inflation rate. So yeah, I think it's a really positive point, but like you're saying, I think the big boys are circling, and they've been positioning to buy the blood and buy the fear for this whole period. And yeah, I'd be very interested to see how Grayscale ends up, because I'm hearing from some sources on Twitter that are fairly trustworthy that they're doing really well in their lawsuit, and it sounds like they might actually be in their bid to, like you said, to become an ETF. With everyone that holds Grayscale could then redeem that massive discount to NAV at discount rate if they wanted to. And that would open up the doors to a heck of a lot of investment in the US. So we could literally be seeing like things like it's darkest before the dawn. We had FTX, we had all this crap. The market's just been absolutely smashed, but then eventually it doesn't go down anymore. And we see the slow grind higher. Things are forgotten, things get a lot better, and it probably is a lot better than we think in the near term. So that's where I think, I know it's probably glass half full.
Yeah. And I think just to kind of counter that argument to an extent, when I see on macro news channels like you shared, Sammy, and I made a comment on it to the masterminds, when I see a lot of positivity being injected into the market from mainstream and crypto media outlets, which I think have been very questionable in recent times, and I will touch on that in a second. But I think when there's that mass hopium, it's kind of getting to if you throw a rock in the middle of the lake and there's these big ripples and the excitement, and then it starts to wean off a little bit. That's just the point of danger that I find on the psychological game, when everyone thinks the price is going to 35, 45, 50, 100, all these analysts come out with these great predictions. It always happens. That's the time that I have most fear. And it's Warren Buffett says it the best: be fearful when everyone else is greedy, greedy when everyone else is fearful. I just see a lot of greed starting to flow into the market, and I am very cautious around this. So that's just a comment, maybe a glass half empty comment, you might say, but I think it's a smart and diligent comment because I've just seen the patterns play out over and over and over again. Don't fall into that hopium camp. Manage your downside. That's all. It doesn't. I'm not saying we can't go further. All I'm saying is don't get over leveraged, don't get over excited, and not manage any of your downside through this period, because a lot of people unfortunately will, and we could end up at that 200 moving average on the weekly still, which is unlikely, I feel, but it's still a potential. So let's consider that and not take our eyes off of it. So. I will start here. In fact, I was going to mention about the media outlets. So one thing you have to realize about media, they are paid on people clicking their shit. So they will do whatever sells. And it has become worse and worse and worse over the years in terms of what people are sharing. And that is something we have to really always understand. a lot of people don't filter the news. They consume the news, they absorb it, and it becomes them, and therefore their actions as an extension. So I just really ask everyone to not jump when they see something. Oh, CZ's got a lawsuit against him. Oh no, the Interpol's after him now. I cannot believe that the top crypto news channels and probably external financials, I didn't look, were publishing that shit from something that was just a rumor. And it's just because it gets clicks, and it's so damaging for the market. And we saw the wick down because of it, which I bought all the way back up at 27K. But it was just so clear to me to see how fragile market psychology is. And that's why it's really an extension of what I was saying earlier, the psychology of the market. When everyone thinks it's going to 35, it's probably more likely to go to 25 just to flush people out. What I will say is, though, the futures markets haven't been over leveraged. When futures markets get really excited, when loads of people are betting long, that's typically when there's an overcompensation of that. We see a strong flush to the downside. I would suggest that most of the trading that's been done in recent times has been spot driven, not futures driven. And the futures markets are usually a lot bigger than the spot market. So yeah, just some things to add. I don't know if anyone else got any comments on what I've just shared in addition to what I said before we just get into the charts.
Well, I would probably just briefly add, just to be mindful that Wyckoff distributions are still definitely a thing, and that what we may be just sort of seeing now is maybe we're just sort of testing that upside. The masterminds sort of know that I've sort of long held the thesis that we're getting to about 32K before we see some form of like significant drawback, whether that aligns with like a Wyckoff distribution, whereby it's just they're just testing that downside before we see the real spring, you know, the real sort of I guess the bullish sort of market drive up, because right now the volume has been a bit, you know, still kind of lacking, like apart from of course the days we get the nice sort of pumps on Bitcoin, but we're not, in my view, we just don't have the velocity. That's I guess what I'm trying to say. I don't believe that there's velocity yet in the market to really send Bitcoin to just like new heights. Of course, I can be totally wrong. And I've also, you know, I know that a lot of key indicators have been hit, which would otherwise suggest that Bitcoin is in a bull market. But I still just think that we don't quite have that velocity yet. And I think a lot of that can be attributed as well to various macro factors. You know, Scoop talks about it extensively, as well as Steve, who has that military experience of, you know, what's going on in China at the moment. Like if there's ever to be another black swan, which may sort of send us back to the downside, it would be, you know, some sort of all-out war, China-Taiwan. So, you know, Scoop might have a different thesis on that, as to whether that would be good or bad for Bitcoin. I guess it would depend on the extent to which you believe it behaves as a risk-off asset in that instance.
No, I completely agree with you. War is just never good for markets. So you'd be a very brave man if you said Bitcoin and gold or whatnot are just going to hold strong or go higher during that phase. I would suspect that like Russia, Ukraine, it tends to, correlations tend to go back to 1 and everything kind of gets hit, and people run for that safety, which is probably US dollar or US Treasury. That's how I'd see it. And then you'd get it, and just broadly second and third order effects would probably be stocks like defense stocks, oil would start to skyrocket. Things that are used in war, and especially you look at Taiwanese, China, that is a main supply route for almost all of Asia. So a lot of that energy and supplies and food and commodities, you would just see, I think, a really big spike, and it would shake markets to the core. So no, I think you're absolutely right. 25,000, maybe a bit lower, would probably be on the cards, maybe. But I would expect to see a pretty quick rebound. Once, because I think with Russia, Ukraine, we saw, was it the war drums, sell the drums and buy the cannons. I think that was the saying, and it worked out almost perfectly. The previous wars had done the same, where the war drums are coming, markets really plateau into it, and then as soon as the shooting really gets into the and it's horrible to talk about markets when there's war and people are dying.
Yeah.
It's kind of how it flowed in Russia, Ukraine, how it flowed in the Iraq War, different kinds of war through history. So that's the saying, and that's kind of how you look at it if you're looking to play that. But yeah, let's hope we don't get that.
Yeah, absolutely. So I want to talk about more near-term stuff as to what's happening right now. So we had the strong breakout the other day. Sammy and I, a while back, put these indicators together. We shared them with our clients recently, where we saw everything got hit. So we expected a move up. While I know a lot of people were still searching for that, we're going to come back down to 25K. We're going to come back down to 23K. And that's the problem. When Bitcoin runs, don't try and fight it. And the best example of that's the first 6 months of 2019, when it outperformed pretty much every other altcoin, went up 250%. We spoke about it a number of times now. So many people just wait and wait and wait. And if everything lines up, you just got to make the play, but you can still manage the downside risk. So having a quick look at this, I'm particularly interested in the lower time frames now, because I'm trying to get put things under a microscope as to where we're going to go. We got to the 30K level. We tried to break above it. Now we're kind of sitting on it. And we went below last night. I was a little bit concerned that we dropped below some really overhead resistance and a number of moving average levels. And we start to have a number of larger red volume candles come in. Looks like we start to stabilize a bit here. And we've regained some of the moving averages. So I'm looking at the 21 and the 50 moving average here. We've closed above them now, both of them on the 1 hour. As of watching this, we've got 35 minutes left of the current one to close. I am only confident when we are able to get in this box. So if you're listening to this, the box levels really anywhere up to that 30,500 from 30,200. So anywhere in that zone, I want to see us close and hold and maintain, because all we've done so far is hit that level and we've got sold off straight away. We've had a number of very, very strong wicks on the 12th and also on both on the 12th and almost these ones here, but also we've seen it on the 13th as well. Recently in the last hour or so, where we've had a sell-off at that level. So yeah, I think that I wouldn't be investing more into the markets at this point in time personally. I'd be keen just to hold off and watch and see what happens, to see if we move through, we get that, we use the support of where we are at, and then have the confidence of a continuation of movement. That's my thought with Bitcoin right now. 15-minute chart looks fantastic. We've regained a lot of those levels and it's looking really, really strong there. But again, just don't feel the need. It's not like, oh, Bitcoin's moving again, I need to accumulate more. What if I miss it? It can move fairly quickly, but it's not just going to rip to 35K like that in a 15-minute candle. You're going to have time to make that decision. So I like what I'm seeing now. There seems to be a lot of strength coming, but I still want that confirmation. And let me just point this out. If you, let's say you sold at 29,800 down here, where is it? Oh, let's just say here, I'll just grab there, to where the price is now, it's a 1%, 1.1% difference. Risk reward, you have to make the strategic right play every time. And the more strategic you become, and the more you manage your downside risk, if you're right, then you can save yourself a ton of money. If you're wrong, then the worst thing that you're going to lose is a percent or two here and there, but you've removed your risk. So I'd be waiting until we get 1.5% up from that 29,800, which is only from the current price of 30,129. We're talking 0.5% to 1% difference of where we're at from right now. I'm happy to sit on the sidelines and wait until we get more confidence. Sammy or Tristan, do you want to add anything to what I've said? Whilst we're looking at the Bitcoin chart in particular.
Look, nothing springs to mind, but I like what you're saying in terms of sort of waiting for confirmation. There's no harm in that. Instead of sort of sticking your neck out on a level and just hoping that it goes up and whatnot. These kind of markets, when you see liquidity is quite low, Yeah, it sort of pays to do that. And I'll just add as well, because I know you're going to go into some altcoins in a sec. I think you might be, is just be really discerning with your choices with altcoins at the moment. The liquidity just isn't there. It's in Bitcoin and maybe Ethereum to a degree. So just really look for strength in the altcoins. Don't be thinking that you can just go out and buy any altcoin because Bitcoin's above 30,000 just here. The altcoins are suddenly just going to, have a massive pump. It just takes some time for Bitcoin to settle, go sideways, have its run, and then historically speaking, we've seen altcoins catch up after that. But it's a precarious sort of state where Bitcoin just has all the eyes, all the capital, liquidity right now. It's trying to run. So again, just be a little bit discerning with your altcoins, and look for things like narratives, like Litecoin has its halving coming up, showing a tremendous amount of relative strength. That's one I think could really start skipping forward pretty soon. Ethereum had the Shanghai upgrade, really a neutral event. Nothing's really happened. So the strength in the big ones where the liquidity flows are really strong is where you should be looking.
Yeah, absolutely.
Yeah, I would just add to respect the structure. That's really all I can sort of say to add to what you guys are saying, is in terms of this watching for that downside risk. It's the old trope, but you don't go broke taking profit. And I think if you're in a good position, and if taking a little bit out even of the market, I'm not saying sell half the portfolios. I'm saying, whether removing something like 5% from the market is adequate to manage your downside risk, then that's something worth considering.
Yeah, absolutely. And not over trading as well. It's not about the more trades that you do and trying to catch the tops and bottoms all the time.
Yeah,
I think
that's
it's about
a major problem people do every
time. Yeah, absolutely. But just want to emphasize the point that Sammy made. The money's being made in the big dogs that have lower risk right now. So don't keep chasing the altcoins thinking they're going to pump 10x. It's just the wrong mentality and the wrong time of market for that. I know so many people that collect coins, and you're just hemorrhaging money to Bitcoin right now. And that's evident. The Bitcoin dominance chart, it will prove that to you. You can see the dominance is going up, and that means it's taking market share away from all the other cryptos. It's pretty much 49% market dominance right now. It's huge. We will look at Ethereum as well. So I did a video the other day on the Ethereum unlock. There was so much hype and misinformation, misunderstanding around the Ethereum unlock. People thought 33 billion was just going to hit the market and everyone's just going to sell. I don't know. Well, I know why they had that opinion. It's because of the media and what they were portraying. Stats show 29% is in profit. So the majority of the Ethereum that was staked is actually at a loss. The unlock doesn't happen instantaneously, meaning everyone just gets full access to all their Ethereum instantly. So there's all these considerations, and people haven't thought about that. The average cost basis for all the Ethereum that was staked is something like 2,386. So you can see that we're a long way off of that. I don't have any concern of a downside. I think the Shanghai upgrade is a really positive thing to move it to being a more efficient and future scalable crypto. But the scalability will only come when sharding comes, and that is the next big upgrade that is around the corner. I don't think there's a date for that yet, as far as I'm aware, but that is what you have to have into consideration into the future. If Ethereum, or when Ethereum gets to that state of being able to shard, then that will give them not instant layer 2 capabilities of scaling, but it's going to help them to hugely scale their network, improve efficiency, effectiveness, and really solidify their dominance as the number one layer 1 solution. So that's a really exciting proposition, and that's what I'd be investing into the future, is what I would say. Anything else that you boys want to mention on Ethereum? Easy. Okay. Let's have a quick look. Just having a look on the lower time frames. So for me,
want to break up, isn't it?
Yeah, absolutely. So very similar to Bitcoin, I had a box that I drew above that I wanted to sit and hold in this level, and Ethereum's the same. So if you look at Ethereum around that 1,930 level, all you can see is every time we've hit that, we've had massive sell-off. I want to see us sit in the box of 1930, really up to 1950, you might say, and hold and stabilize and prove that it's going to stay there. Then I've got confidence to trade. But until that time, I don't feel the need to be in a trade. I don't care on missing out on 0.5%, right? And this is where you have to be very intelligent. It's 0.9% to get into the 1930 range. Don't trade it. There's no need to trade it right now until we get that confirmation. We use it as support, then make the trade. Is what I would suggest for anyone that's considering moving more money into the market. Litecoin. Sammy said it. Halving's coming. It's proven through its prior halvings that it has a strong run up into it, and then it has a sell off before the event. So be mindful of that. August 2nd is the event of the halving, so set a reminder or an alert for the end of June to consider taking some profits off the table. But I'm very heavy into Litecoin. I'm really positive about the future of Litecoin and where this can go. And I think that you guys should be in the short term as well. I think it's going to be one of our best performers, I would suggest. So yeah, that's just my thought. Obviously, something macro can happen. It can sideline it. Everything will have an impact. But even if that did happen, Litecoin would still perform better than the other cryptos. I anticipate if the market did come down, it would hold up stronger. I think more liquidity is going to flow into it. Anything that you want to share with an extension of that before we move on to a different topic?
No, nailed it.
Easy. Tristan, I'm really keen for you to share the overview of what you just released in this month's or your fundamental analysis session for this month in the newsletter.
Yeah, well, I'm pretty stoked on this one because it's a bit different to how we normally go about doing the FAs. Typically, we're telling you about a particular token and what the value proposition is, but instead we're actually just looking at a piece of technology that has like a high likelihood of an airdrop. So rather than telling you what the best way to enter an existing token, we get to explore the different ways that you might qualify for an airdrop of the Zero token. So in the source code of the Layer Zero protocol, first off, just to give us a bit more confidence in an airdrop, there are some lines of code within there referring to a Zero token holder and the like. So that's what a lot of the assumptions around a airdrop taking place are predicated on. But the actual technology itself is super interesting. And another reason why I'm really keen, I was quite keen to cover it, is that it really does change our investment thesis in terms of how we're going to allocate towards interoperable or Layer Zero protocols. So I've got at least 2 FAs that we've done in the past, Cosmos and Polkadot. Both are Layer Zero protocols. So in their entire value proposition, in that particular sense, is predicated on having interoperable functions, being able to do something on one blockchain and it happens on another. So Layer Zeros come along as basically like a user application that can quite easily plug into EVM and non-EVM blockchains. So basically the difference is, because we know that there's been a lot of losses in DeFi, right? Billions have been lost, and primarily through bridge exploits. It'll lock a token on one blockchain and then mint a derivative token on another. So what's really cool about this particular piece of technology is you will, instead of doing the lock and mint, you will deposit an asset in a liquidity pool on one side and then withdraw that same asset on the other side. So by doing that, it just removes a bunch of attack vectors or risk factors involved with having a lot of different contracts. It's more capital efficient. So you're not like having to pay fees on 5 to 6 different transactions in order to, get onto another blockchain. So we look into that. We touch very briefly on Stargate Finance, which is a product from Layer Zero. So you get to see a little bit of how it works in action, which I think is pretty cool. And then I'll just wrap up so you guys can dive in and read yourselves. It's I guess how the impact of this piece of technology will impact the other protocols in the interoperability narrative. So it's not to say that Polkadot and Cosmos are now completely useless, but in terms of us thinking about, do we consider them to be layer zeros now, or is the strongest value proposition within the fact that they do operate as an L1 in the sense that they have their own dApps, their own communities and ecosystems that are still likely going to be there. But yeah, I do think that the zero token airdrop will be proportionally disruptive as the Arbitrum airdrop was to other layer twos.
Yeah, interesting. Fascinating stuff. The depth of your knowledge, I was saying this before we got on video, the depth of Tristan's knowledge is just mind-blowing. So really worthwhile reading and understand this technology, because it will shape what happens next with layer 0, layer 1 solutions, and the value proposition that they hold now, which has maybe been hindered through a new technology, which Tristan pulls back the curtain on. So make sure you read the release. I know I'm super excited too, and yeah, and to learn more. I'm always learning. I know Sammy's always learning. We all learn off each other because we've got different skill sets. So nice. The final thing that I will say before I hand over for any other comments, we're looking at potentially shifting to a different newsletter platform, which will be really exciting for us because it's got the capabilities of offering rewards for people referring the newsletter to other friends. We know that a ton of you love our newsletter, which is really awesome, and thanks for reading them and tuning into them, and yeah, and appreciate the guys for all the work that we share and put into those as well. It's amazing the content that gets shared around. So that will give you the opportunity to share the awesome stuff and magic that we do with your friends, but also get rewarded for that. We're not able to do that on the current platform that we have, and that's why we're considering shifting, and it's got a bunch of other cool features to make things look a lot easier and nicer for you guys too. If you do like these videos as well, please comment, please like, please share, not just the videos, but the newsletter as well, because it really helps us to understand if you like what we're doing as well, and to keep doing it. Because if you don't always like or engage, then we don't know this. So it's good for you to share that and give us an air high five for the work that we put in too. Sammy, anything that you want to share?
You took the words right out of my mouth. I was going to say, please, if you like these videos, just make sure to comment and all that. I think maybe we'll just add there as well. We're looking to expand where you can view this or listen to this. So we'll release it on our podcast channel through Spotify and iTunes. So you can listen to Joe, myself, and Tristan on the go, which is great. So again, just click like, leave a comment, let us know what you like, what you don't like, and yeah, love these sessions. So thanks, guys.
Awesome. Tristan, anything you want to share before we hit the stop?
Nothing to add. Another great session, fellas. I really enjoy doing them. So yeah.
Awesome. Cool. Thanks for tuning in, everyone.